Hey, what's up? It's Ben here. It seems like everyone wants to become a millionaire but lack the motivation or knowledge to do so. They just simply don't know where to start, or after saving a couple hundreds of dollars, they just give in and start splurging on things that they don't need. But it doesn't have to be that way. As long as you have some sort of income coming in and you can save, you're ahead of 80% of the population. You don't have to be making much. You can literally be working at a restaurant making minimum wage and you'll be fine. I did that for a few years and I came out just fine. Now, this could take some time, maybe a few decades, but it's super simple and low stress. You're gonna set yourself up for retirement successfully if you invest early. It's not gonna sound glamorous, but when you retire, you can become a millionaire if you do it. Now, I'm not a financial advisor nor an accountant. This is just to show you what's possible and that investing is not hard, but it does have its own form of risk. So today, I'm gonna break it down to you how to create that $1 million stress-free and tax-free for your retirement inside of a Roth IRA. First things first, if you haven't done so already, you need to open up a Roth IRA. You can simply sign up for one in Vanguard, Fidelity, or even Webull. And if you want to know how to set one up in Webull, I have a video on that. They offer you 2 free stocks when you sign up and fund your account. You don't have to go with the ones I've mentioned. You can basically sign up with other brokerages that offers a Roth IRA. Typically, it takes less than 20 condensed minutes to sign up. I say condensed because you're probably going to have to wait for a day or so to get your account approved, and because you might want to read the disclosure and terms and conditions. Once that's done, let's break down how much you actually need to save and invest. And by the way, a Roth IRA is basically for the not so rich folks like you and I, because I can almost guarantee you that we don't make at least $200,000 a year if you're doing this. So this is mostly for younger individuals. I say this because when you start to get older, you'll probably start making more and you'll probably get married at some point. Basically, everything is going to double, so it's gonna skew the results a little. But you can still become a millionaire, and that could be another topic in itself. But anyway, let's say that the average American retires at the age of 67 years old. If you're around 20 years old, it means that you have more time to invest. Now currently, as of 2020, a young individual like myself making less than $124,000 a year, I can contribute a maximum amount of $6,000 annually. And let's just say that $6,000 amount is fixed for every year. Most likely it won't be fixed, but let's just say it is. That means you're gonna have to make and save at least $6,000 for this to work. If you break this down, that's $500 a month, or about $16.44 a day. In California, minimum wage is about $12 an hour, and you just need to work 2 hours a day to make this happen. Now, I know we all have expenses and bills to pay, so maybe work a little, but this is doable. Even college students, sign up for Instacart or Uber Eats if that's what it takes, and live below your means. Maybe ditch the Starbucks coffee and brew your own. And once you do get your money, we're going to have to find something to invest in that's going to give you decent returns with low stress. So we are going to look at the stock market, especially ETFs, or also known as exchange traded fund. And they are basically a collection of various assets grouped together that'll help you diversify your investments. Now, you know how people say that the stock market averages about a 7, 8, or 9% return annually. Granted, some year it's going to be high and some year it might even dip to the negatives, but generally speaking, it's going to be around those numbers. Now, how do you find numbers like these and know what to invest in? Great question. Let's go to Google. What you want to do is type in Vanguard ETFs on the search bar, and why I chose Vanguard over other brokerage is because their expense ratio is super duper low and they're reliable. Basically, it's the cost to own the ETF. I'm not sponsored by them or anything. Feel free to do your own research and check them out. So what you want to do is click on the first link here. And then this is all of Vanguard's ETF. And basically you want to check out their little sticker S right here. It's basically their recommended ETFs. So if you scroll down, you have the bonds over here. If you want to invest in bonds, you could do that as well. So if you scroll down a little bit far, okay, so there's stocks right over here. Scroll down and find the little S's right here. See, there's one for VOO, ticker symbol. Ticker symbol VTI is the total stock market ETF. So if you pan over to the right, you'll see all the expense ratio right here. Basically, what's saying that it's this one right here, VOO, is 0.03%. If you invest $1,000, it's gonna cost you 30 cents a year to invest in this. But if you pan over to the right, you'll see the average annual returns, and these are all of here. Year to date, we're in a crisis right now, so it's dropped to 8%. But 1 year, it's 0.73%. 5 years, it's 9%, and hasn't shown for 10 years. but this is since inception, 10 years, 2010, it averages around like 12.98%, which is 13%. And this is really good, but if you scroll down a little bit more, VTI right over here, you see that it's around 7%, and this is since 2001, so it's almost around 20 years. So that's where people, sometimes get an idea, hey, if you put it in these ETFs, you're gonna get these kind of returns. And that's true, because you can see these returns right over here. Obviously, if you want something that's higher, there's going to be a higher risk. So but if you click on these ETFs right here, you'll see the portfolio. So let's click on VOO on this one. So let's go in, and this is the entire overview of that portfolio and how much they're investing in and what's in it. So if you scroll down a little bit right over here, okay, so composition. So what they're investing in and what's in it for you. So here's Microsoft, Apple, Amazon, etc. So you see all of this, and if you scroll up a little bit more, you see that there's a risk level or risk tolerance or whatever you want to call this. So it's at a 4, so it's a little bit risky, but at the same time, high risk, high rewards. Again, this is a simple strategy. Basically just buy ETFs and you have your annual returns right there, right over here. Scroll down, VTI, VOO. These are the stuff that I personally buy too, and everything is just laid out. You just have to do it consistently. Now that you have your money and you picked your ETF or ETFs, what you want to do is just continue putting money into it and growing your investment. So let me show you with a compound interest calculator to see what it'll take to become a tax-free millionaire. And remember, we are investing inside of a Roth IRA, that's why it's tax-free. So if you scroll down a little, for initial investments, we're going to type in $6,000. Monthly contribution is going to be $500 a month. Length of time, so let's say if you're 20 years old right now, and if you want to retire at 67 years old, it's basically 47 years for investing. So if you scroll down a little bit more, estimated interest rate, it's going to be 7. But we're going to be super conservative here. We're not going to say that's going to be 9% or 10%, anything like that. Super conservative, 7%. And then for the interest rate, we're going to leave this blank right here. Compound frequency, it's going to be annual. So hit calculate. So in 47 years, you'll have about $2.1 million. And you can see the chart here. You can see how much you're putting in and then what's the future value of it. So, but let's be a little bit optimistic about this and say that, it's not going to hit 7%. It's going to do 9%. Let's say 9%. Calculate that, and it almost double. And this is the beauty of the compounding effect. And for those who are around 30 years old, let's do the same thing again. So $6,000 right over here for initial investments, $500 a month, year time. So if you're 30 years old and you're 67 for retire, so that's going to be 37 years of investing. Estimated rates, 7%, and then hit calculate. So that's $1 million in 37 years, and you see everything right over here. Let's just say that it grows 9%, 1.6, 1.7 almost, yeah. And if you scroll down a little bit right over here, show table, you exactly see the contribution amount that you put in and the future value amount. So if you scroll all the way down, at year 37, you have contributed $228,000 to make $1.7 million. So that's not bad. So there you have it. Just a quick recap here. First, you want to open a Roth IRA account. Second, you want to make and save at least $6,000 a year. Third, you want to look at Vanguard's ETF that is right for you. And fourth, invest in it every single month or year to max out your yearly contribution amount. And fifth, just rinse and repeat. Don't worry if the stock market is going to crash. It has its ups and downs, and you're doing this for the long run, so it doesn't matter. And once you hit that retirement age, you'll be safe to know that you'll have at least $1 million all tax-free if Social Security ever runs out of money. Do this for yourself because your future self is going to thank your past self for knowing this. So with that being said, I hope you guys like this. If so, drop a like and maybe consider subscribing to see how I'm actually growing my portfolio, and I'll catch y'all later.